JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today's the 11th of March, 2020. So yep, welcome everyone. Welcome to this Wednesday's morning session where we're going to have a quick look at the markets, a few of the charts, a few of the setups. But as always, before we do that, let's quickly have a read through our risk disclaimers. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, also, just before we jump in, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, I believe you can find a lot of useful information here for yourselves, guys. So feel free to visit us on jfdbank.com and click on the research tab right there. Now then, let's quickly jump into the charts. Now the first one I want to touch on here is the FTSE 100. Now yesterday, or should I say, basically I keep talking about this one, and yesterday we had kind of a bit of a recovery. Don't get me wrong, still the index closed fractionally in the red, so we could only close it at minus 0.09%, but again, for now we're still skeptical about any larger recovery. From the technical side, how we could look at this, and if we look at this for our chart here, now in my previous videos I was talking about this recovery, and this basically was what I was saying yesterday. For example, if the 6,231 territory continues to hold, we could see another round of selling. So for now you can see that yes, it did hold, and kind of we did get a drop lower. Don't get me wrong, of course we are quite overstretched here to the downside. So in a way, what we could do here is we can draw a nice downside resistance line from here, from the high of the 20th of February, and yep, if we do something like this, that's what we can focus right now, for now. Basically, even if we get a push, let's say for by any chance we get a push above that 6,231 zone, still kind of, if this downside line remains intact, then yes, we will continue targeting the downside. Now looking at the cash index right now, you can see that the price is currently balancing around the 5,970 mark, so basically not far from yesterday's close. So in a way, no major surprises, opening surprises here on this index. But like I said, if we by any chance get another push higher here, and it travels up and above the 6,231 zone, keep your eyes on this steep downside resistance line. Take it from the high of the 20th of February. If that area holds, then yep, we could see another round of selling, potentially driving this index back to these lows here, the 5,900 level, which was nicely tested this week. Or but if a break of this area, break of that level, could in a way, of course, or should I say would confirm a forthcoming lower low, and yep, levels like the 5,788 zone, which I've mentioned previously in my videos, could be met as well. So just to kind of recap, that level here, the 5,788 is the lowest point of June 2016. If this downside line breaks and we see the rate climbing, sorry, the price climbing back above the 6,460 zone, then yes, we will aim for higher levels. But I've mentioned this as well in my previous videos. So we're, for the upside, at least for slight upside, we are looking for a break above the 6,460 zone. Nikkei, very quickly on this. So Nikkei yesterday closed in the red, and let me just quickly double check that. Yes, it closed yesterday in the red, and Of course, now the big question here is, can this get back above, let's say, certain levels here? Now, looking at the cash index right now, the cash index is currently balancing around the 19,340 zone, so basically not far from yesterday's close. But we will keep an eye on the daily chart here. As you can see, we, after kind of breaking this this little range here, as you can see, I've looked at this one a while ago, so since then kind of a lot of things changed, obviously, but basically what we can do here is, of course, for now, from the technical side, we can continue monitoring some of these levels. Of course, the current low here, the 18,891 zone, roughly around here, and then another area of one interesting area could be seen here, which is the lowest point of December 2018, or in other words, actually the lowest point of December. So as you can see, the price kind of overshot, the index kind of overshot that low, the lowest point of 2018, created a slightly lower low, but then it was quick to retrace back to the upside. So in a way, what we can do here is, looking at this chart from the technical side, basically if we get a push back above the lowest point of August 2019 here, which is around the 20,110 zone, then, well, I mean, we may consider a bit of a larger correction to the upside, and this is where it could become maybe a little bit more interesting for the buyers. But excuse me. Again, for now, guys, still the kind of the trend, the short-term trend, at least the short-term trend, is still to the downside. Of course, don't get me wrong, there's a lot of interest here right now from the buy side, but to be honest, let's be careful, let's be cautious, and let's take some precautions, and let's wait for a push back above the 20,110 zone, roughly around here, and then we could potentially aim for a bit of a correction to the upside here. For now, we will probably take a more neutral stand, because for us to consider further declines, we would like to see a drop below this area here, the 18,950, which is the lowest point of 2018, or the 18,891 zone, which is the current low, the current lowest point of this month, and the drop below that could lead towards further declines. That's why for now we will take a bit of a neutral stand here on this one. WTI oil, very quickly on this, I'm not going to spend too much time on it, but looking at this daily chart, and this is what I was talking about yesterday, basically what I was saying, that if we get a nice good break and we stay above the 34.80 zone, then yep, there is a possibility to see a further move higher. As you can see, yesterday we closed below this, below that area, below that 34.80 zone, and just let me remind you that 34.80 zone is the high of the 27th of January 2016. Is that 27? This is where I keep capturing this one. No, that's the 28th of January 2016. So good potential target here, very good level to monitor, and as you can see, we've failed to close above it, and today although we did get an overshoot, but the bears are really trying it hard to bring this one back down. So again, for now we will stay a little bit more, I should say, cautiously bearish. But if by any chance we do get a nice good daily close above this territory, above the 34.80, then yep, we will aim for a bit of a larger correction to the upside. And the reason why I'm saying correction, because we're still below this downside resistance line taken from the high of the 8th of January. Ethereum, now the crypto world, jumping into a 4-hour chart on this one. So after kind of we managed to break some of these key levels, and actually let me just get rid of some of these lines here. So after we managed to break and fall below the 208 zone, I've looked at this one previously when I was covering Ethereum, but you can see that now the crypto is kind of trading below this nice downside resistance line taken from the high of the 19th of February. And for now, guys, of course, the likelihood here is still more to the downside, especially looking at this pattern here. I mean, we are having a bit of a slowdown here, but to be honest, this might be maybe seen as a weird flag maybe, or a weird pennant, but to be honest, what we're going to do here is we're going to mainly focus on a triangle. So a little short-term triangle, which was probably better visible on a 1 hour chart, and this little formation here, that's what we're going to be keeping an eye on, because we need to see a break through one of the sides of this little triangle before kind of considering further a further move, or should I say a further directional move, because in a way, like I said, in a way it could actually reverse here sharply to the upside and push higher, but in a way, coming back to the 4 hour chart, in a way, just to kind of play it safe, I would say if we break the upper side of the triangle, wait for a push above the 208 zone, because a nice good pop above this could in a way also place the price above the 21 EMA here on the 4 hour chart, shown as the yellow line, and in a way more maybe buyers could be joining in here, potentially dragging this one to the upside for a larger correction, because we're still below this downside line. So but if the lower side of the triangle breaks and we see the price falling below this recent low, the current lowest point of March, which is around the 189 zone, then yep, this would confirm a forthcoming lower low, and yep, further declines could be possible. Initially we'll target the area around the 179 zone, but then basically there are some lower levels to consider as well here, like for example the 170 mark, but again, for now we're waiting for that exit. AUDUSD, very quickly on this, AUDUSD, I've talked about this one in the beginning of this week, and jumping back into daily chart. So what I was saying, that if we see the kind of the rate staying below this downside line, then there's a good chance for this one to drift further south, especially if it falls below the 0.6510 zone. As you can see, it did that and continues to drift lower. Of course, don't get me wrong, the more comfortable level for us here is around the 0.6434 mark, which is the lowest point of February, and a drop below that again could lead towards further declines. I mean, then we could maybe even target the lowest point of March here, current lowest point of March. And actually, let me just jump into a 4 hour chart, because I believe that on a daily chart the levels kind of get skewed a little bit. So there we go. So this is the 4 hour chart, and these are the levels to aim for. So in a way, if we get a drop below the February low, which is around the 0.6430, there we go, just a slight correction, then yes, we will aim for the current lowest point of March, which is around the 0.6370 zone. So sorry, 0.6307 mark. So keep your eyes on down. In terms of the upside, pretty straightforward. We need to see a push above the 0.6657 mark. I talked about this one previously, and then yep, we could aim for higher levels, because at the same time the rate would be placed back above the 200 EMA here on the 4 hour chart, so where more buyers could see this as a good opportunity to step in. GBPUSD is something to consider today. We do have the we do have some data coming out from UK, so the GDP figures, manufacturing production, construction output figures from UK. So yep, of course, and of course the autumn delayed autumn budget. So yep, guys, keep your eyes on that one. For now, looking at this picture here, looking at this technical picture, we can see, and this is a 4 hour chart here. Of course, for now it's on a slide, but in a way, what we can do here is just probably take a bit of a cautious approach, because it's a little bit kind of sideways and really oscillating near its 200 and 100 EMAs here on the 4 hour chart. So for now, what we're going to do here is we're going to take a very conservative approach. Ideally, these are our preferred ideal breakout levels. So basically, in order to consider lower levels, a drop below the 1.2724 level would be needed. This way the pair would confirm a forthcoming lower low, and yep, we could then start aiming for levels like the low of the 14th of October, which is around the 1.2514 zone. And in terms of the upside, of course, preferably we would like to see a push above the 1.32 mark here, This way, yep, the pair would confirm a forthcoming higher high, and some levels like here, for example, the high of the 31st of December 2019 could be open. I mean, could be available then, and more buyers could be joining in. But of course, from the very short-term perspective, how you could look at this, for example, maybe for today, is if we get a push back above the today's high, which was around the 1.2938 zone. So a nice push above this could in a way open the door towards slightly higher levels, like some of these intraday swing highs and lows. So one of the lows here is, of course, around the 1.3014 mark, and the next area of resistance could be seen around here near the near an intraday swing high of yesterday, which is around the 1.3080. That's of course in terms of the upside, and if we get a push above the 1.2940. In terms of the downside, now again, it's currently well, or should I say, today it already dropped to the 1.2825 level. So in a way, what we can do here is we can keep an eye on this one. If we get another drop below this, then this could open the path towards the low of the 4th of March, and that's roughly around the 1.276870 zone, so roughly around there. Of course, if that gets broken, then yep, we will aim for that lowest point of February near the 1.2724 level, which I've mentioned previously. So basically, long story short, guys, of course, preferably we would like to see a breakthrough these levels here. Let me just quickly put them on the chart. Preferably that's in below the 1.2724 or above the 1.32 zone. But from the very short-term perspective, if we get a push back above this little territory here, the 1.2838 zone, or a drop below the current today's low, the current low of today near the 1.2825 zone, then yes, further declines could be possible. So keep your eyes on these. EURCAD. Now, something I wanted to quickly run by you. Basically, it's a very nice, interesting setup here. Of course, after this nice explosion to the upside we had in the beginning of this week, so the pair continues to trade above this little short-term tentative upside support line taken from the low of the 26th of February. Yes, of course, keep your eyes on the crude inventories today. So just the crude, the EIA weekly kind of report for oil. So yep, something to consider here, because again, the Canadian dollar is affected, as you know, is affected by the prices in oil. So for now, you can see that this pair is coiling up. Now, in a way, we could maybe even say that this is forming a bullish flag. If we would have a nice straight kind of candle here, then yes, this would be a nice, very nice bullish flag or pennant. We can even actually call it a pennant more. So in a way, we're gonna keep an eye on this for now. Of course, as I said, this looks more bullish than bearish. We are still above this upside support line, so we could see maybe a pop higher. The only problem here is, as always, in such scenarios, in such cases, we would prefer to get a bit more confirmation first. So in a way, if we get a push above this upper side of the pennant and a push above the 1.57 zone, then yes, we will aim for higher levels. But if it suddenly drops back down and falls below the 1.539192 zone here, then, well, I mean, this is where it could become a little bit more interesting. Or actually, let me just double check this. 1.54 zone, there we go. If it falls below that, then we will aim for a deeper correction to the downside, but only up until this upside line, and we'll see how it performs around there. Because if it gets a hold up, near this upside line, then we could see a nice curve and a push back to the upside. But again, for now, the only thing we can do is wait here and wait for that confirmation breakout. Don't try to predict it, because in a way, let's not forget that we have seen several times happening here where, let's say, let's say one of these sides could get broken first, but then it quickly reverses sharply in the opposite direction and kind of takes out a lot of traders. So that's why wait for a confirmation break through one of the levels better first. Finally, euro dollar. So it fell yesterday below the 1.1355 zone. So I talked about that one, and what I was saying, that if it falls below this and stays below this, then yep, we may see a bit of a correction here to the downside. So look, this daily chart kind of paints a slightly better picture. So as you can see, it fell sharply below it, and this morning we were seeing already a bit of retracement here to the upside, but it's still getting a hold up near this 1.1355 zone, which now is acting as a good area of resistance, or should I say, once again is acting as a good area of resistance. So keep your eyes on that one. For now, to be honest, looking at this picture, we are leaning a little bit more to the downside here, especially if this 1.1355 level continues to hold. If it does, then well, maybe it's time for a bit of a larger correction to the downside here. And the reason why I'm saying correction, because we're still above this upside support line taken from the low the 21st of February. Let me just jump into a 4-hour chart very quickly. So yeah, in a way, something like this could be possible here. So consider this as an idea. But by any chance, if we get a push back above the 1.1355, and if it stays here, and if we do let's say see a 4-hour candle close at least, then yep, maybe we could get back towards these highs. But for now, like I said, we are kind of leaning a little bit more to the downside. For those who are more on the cautious side, you could actually play this one safely as well. If we see a drop below this level here, the low of yesterday, which is around the 1.1273 zone, then well, further declines could be possible here. So that's why this is the kind of the safe option here. But as I said, guys, for now, be very careful in this one. If it continues to, if this barrier here, the 1.1355 continues to hold, then yep, we could see another round of selling. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on in my traders tea time, as always, 14:15 GMT. So yep, guys, hope you, like I said, you found this useful, and join me later for my traders tea time, 14:15 GMT. For now, I hope you have a beautiful trading day, and I'll see you later. Thank you very much, and bye.